Hey everybody, Sive Morten here with the ForexPeaceArmy.com. Let's go straight forward to the analysis of the coal market. So previously we talked about the possible retracement and in general reasons why market could show the pullback. Today we also could add to the factors that some too much hype around the gold bullish market. Yes, we agree that gold is great and probably in the long term it should keep going higher, but in the current situation it is too much attention. So even in the newspapers already some articles have appeared, so as we shared today in the Telegram channel with a screenshot that analysis just 6.6 thousand targets and actually moving in higher and higher and actually feeding this hype round. And from the sentiment point of view, this is also works against the possible trend continuation. Of course, it's not the determinant factor, but it also makes sense. From the technical point of view, already tells that this gold market stands a bit overextended, overbought on the weekly chart, and actually has reached a few important upside targets. It deserves the retracement. Some technical pullback, it might be even more or less significant compared to the scale of the daily chart or intraday charts, but still it will be moderate in terms of the big trend. Also, I think that major trading, or maybe not the trading, but the general driving factor for the gold is the liquidity issues that we discussed in the weekend. It might be really important, it's just because it is not very public, I would say. So only experts and analysts, economists know about this, who track some specific indicators, such as residuals of the reverse repo with the Fed accounts, SOFR rate, overnight fund rate, spikes. So the selling of the balance of the foreign holdings of the United States Treasury. So this is the gathered some combination of the indicators that most people are not watching on, and they just do not know about this. So, but we do, and we actually share with you on this subject. And performance that we see currently on the dollar index and in particular United States Treasuries. I am not ready to state definitely that this is it, but the way how market performs, I can't exclude that this is the first echo of this situation with the liquidity. If it indeed stands so that on the gold market, it also could trigger some pullback. Meantime, on the gold market reaction is not as strong, to the downside as in the euro currency. And yesterday we even have got this bullish grabber. So grabbers suggest taking out of this top. I'm not speaking that it should be straightforward upward continuation, but at least based on this pattern, market should return back to the top, some flirting around it at least. So from that standpoint of view, a nominal trend remains also bullish, and currently here we can't consider any bearish positions, of course. But there's some specific exist on what particular trade and how better to take the position with this pattern, if you would like to. Because yesterday we talked about momentum trade that could start from the 37.30. First support based on the thrust in action. We haven't got any clear duopoly patterns here, but nevertheless it absolutely doesn't cancel the existing momentum. And from that standpoint of view, you can see that start was just great. If you have taken position here, that's great. So we're moving to the target where you could make the decision whether to hold it or just split it in parts to keep the rest for possible further upward continuation with the grabber pattern and so on. Because with this downside action, market has reached precisely XOP target of this ABCD pattern. So that was a nice opportunity. This is for those of you who already have taken position here. If you have missed it, but you would like to trade with the grabber, it's a bit different setup, because if you take a look at the shorter time chart, this is the 30-minute chart, you can see that market is coming already to the minimum target of the momentum trade. This is the 37.62. Here will be AB equals CD target. This is the minimum target of this page of the momentum trade. And if you would like to possess yourself for the grabber, maybe it makes sense to wait for a pullback here, for retracement. Just to minimize your potential risk, to get some entry on some predefined support and so on. So do not jump in right here, because right at this point it's not as attractive for a possession. Although risk-reward ratio stands close to the 1-to-1 or maybe even slightly greater, but in the current circumstances, I wouldn't consider the buying immediately. So from the technical point of view and taking in consideration the probabilities, the more correct decision in the current situation is to wait for retracement out of the this resistance area and watch for possible entry on some support levels. So probably we could discuss this moment tomorrow as well, because market probably will spend some time if retracement was done here right somewhere in the morning on Friday. We could get different picture, and maybe it will be ready for making the particular trading decisions with the grabber that we have on the daily. For now, this is only something to do for those of you who have taken position at the daily support here that we discussed. So that's probably all for now. See you tomorrow.